Life and Lifestyle. Today is September the 28th. Time for another market recap. Today is round 46 or 16, round 16 of the new 30. We're halfway through the second round of 30. First thing first, follow me on Twitter and on IG. Get the stock market playlist, 30 resources for $30 to teach you everything from the people I learned from, and get the merch, hoodies, t-shirts, and tank tops. All right, so today's market. The market was pretty much red. Let me pull up the SPY. This is the SPY. As you can see, the SPY was down, as well as the Q. So today was a red day overall. Majority of the trades I had pre-picked had already triggered to the downside. So I didn't really have much to trade. Of the 6 to 8 trades I was looking at, I think only 3 or 4 of them actually did something. Or at least 3 or 4 of them I was able to play. And of those 3 or 4, one of them wasn't even supposed to be up there. So let's go over the trades I took. First trade of the day, Verizon. I was watching Verizon at the open. It was the only trade at the open on my pick 6 that was actually usable at the time. So I was looking at Verizon for the call side at the open, right around here, because it popped right here, triggering to the upside. So I got into Verizon around here. I took a $55 call. I took 2 of them. My first time taking 2 contracts in a while. Because the trade was $22. So I figured, hey, I'm normally risking no more than $5 a trade, so I can take 2 to take a bigger risk and have a bigger upside. I'm only risking $2. So I jumped into the trade around here. Verizon was going up and up and up. Verizon went all the way up to 54. Let me put this. Verizon went all the way up to 54.69, and I figured it was going to keep on going, head on up to 54.98, which is the sell zone I was looking for. But alas, it did not. At this point, the market decided to turn for the worst, and Verizon just completely reversed to the downside and just died. Now, this trade, this is my worst trade of the day by far. As you know, I do a 10% auto stop, so I should have got out around 20. I should have got out between 19 and 20. My stop loss was at 19, so I would have lost a total of $6. I decided to cut my stop around this zone and just let it fall because I felt like it would bounce. Because it had so much strength to the upside and had positive news, I felt this was just a small zone fit to go to the downside, but I was wrong as a motherfucker. What I should have done was just cut my loss around where I said cut it for 20, because it went up to like 24, so I was up about 10%. So I could have cut it at 20 and then waited for it to come back up to my re-entry zone. Because my real stop was right here, 54, 57, 54, 55. But I didn't. I let it fall, and then I sold it all the way down here for a 23% loss for $10. I lost $5 a trade for a total of a $10 loss. My biggest loss on a single trade in a long time. One of my biggest losses in a long time since I started the new strategy, and that's strictly because I didn't stick to my plan. I was stubborn and hopeful, for this was the only trade that was going. So I was like, hey, if this doesn't work, I have nothing else to trade. And I just let my emotions get the best of me and just played it wrong. It was dumb. After it failed there, I got out. Now, granted, it pulled back up around here to about 20. So I could have saved $3 and got my original stop loss had I waited, but I didn't know it was going to do that at that point. I was already too stubborn. I could have sold it at 18. I could have sold it at 19. I could have sold it at 20, but I sold it at 17 because I was being stubborn. Had I sold it at 20 and saw the rebound, I might have been able to, at 54.47, I might have been able to get into the put side early because then I would have saw what it was doing. But I was already butthurt. So I played it wrong. And then after that happens, I get into the put side. Shortly after that trade, maybe about 10 minutes later, I get into the put side. A $53 put for $31. And around this section, I drew this right here. So between here and here, so between 10:20 and 10:30, I decided to cut my put early. I cut it for a break even of 31 to 31 because it had went up as high as 29. And my stop loss was 28. Actually, it didn't hit 29. It didn't. It did not hit 29. It hit 30. And I was like, you know what? I'm not feeling this trade. I feel like I'm revenge trading. I feel like I'm trying to get my face back. Even though it's strictly following my rules, it's hitting my target, it's hitting my triggers to get in. I felt like I was revenge trading, so I cut it for a break even of 31. And also part of my logic was, well, if I cut this trade for break even, then it's more like I just lost 2 trades off the first one, so I could feel like I only lost 11% on 2 trades instead of 23% on 1. That was just to make me feel better. But then, as you see, I drew this triangle right here, and I got out right here at 10:25. At 10:30, it broke to the bottom of the triangle and just started to die and just kept on dying. It hit for 15% right here, then it came back up. I was like, see, even if I would have took the trade, it wasn't no thing. But it held 10% of that 15, or it held 10% of that win, and then it continued to go. Then it hit 30% right here, which is the target I was shooting for. Then it kept on going and hit 50% down here. And then it came back up. So had I just held on to the Verizon downside, I would have got my face back. I would have lost 10 and won 15. But had I traded it properly and cut it early, I would have just lost 4. Then I would have been ready to take this, and I would have caught that for 15. So I would have been up 11 instead of down 10 on this trade if I would have played it right. But I just didn't do it right. Trade number 2, Altria. I did Altria well. I took a 47.50 put around this part to the downside. Yeah, I took the put right as it entered, right around here. A beautiful entry point. I maybe could have got a little bit better entry, but I think I did good. I got it for $43. I probably could have got it for $42, $41 if I was a little bit quicker, but whatever. Got it for $43 and just let it fall. Just let it fall on down. It fell perfectly. It bounced back up. It had hit 55, I think. I wanted to sell it at 56. It hit 54 right here. Bounced back up. And then came back down. Danced around here. I was watching this. And then it fell. And I sold it right here. Right as it broke under. I sold it right around here for 56 for 30%. Now it went as low as 59 right there. Let me do the bar. It went as low as 59 right here, but I didn't catch that. And it did do a little bit more than that. I think it went as low as 60, but I got my 30%. I was happy with that. And also I got my face back. So I had lost $10 on Verizon, and now I won 13, so now I'm green on the day. And then trade number 3, Bank of America. This trade was strictly off of my always watch list and off of the levels I had marked from the day before. Bank of America had some good volume. It was one of the few trades, one of the few tickers on my watch list that were going positive, where everything was going negative. Plus, as you see, it had popped earlier in the day. So I figured after all the hubbub had died down, it was going to pop up. So I drew this triangle as you see here. It was built, it was following it up. So I got into a call right around here. I got into a call right around here, $45 call for 50 bucks. And I was like, I'll put a 10% stop loss of 45 and see what it does. So my stop loss was down here. Around 43.25 was my trigger for to get out, right beneath the triangle. So it traded within the triangle for a while, and I was expecting a breakout right here, but then it broke to the downside. And when it broke to the downside, it held here, because at this point my trading platform was acting weird. It wasn't tracking the price movement properly. It was like it was delayed, like it was 5 to 10 minutes behind, even though I have real time. And I'm not sure what that was. Maybe my internet was acting weird or something, but it really caught me off guard. So when that happened, there wasn't much I could do. So I decided to just cut it. So I cut it right here for $3 loss for 5%. So I cut it early. I could have maybe held this. Let me see. Let me see what Bank of America did. Bank of America, $45 call. No, it would have triggered a stop loss. So I was smart to get out of there early, because it would have hit my stop loss anyway. Right now it's at 44. So yeah, I would have got out of there anyway. So so yeah, that trade, I lost $3 on that trade. And that was that. And those are my 3 trades of the day. What did I do right? I traded Altria like a boss. I traded Altria very well. I maybe could have got a slightly better entry point on Altria, but I don't think I could have traded Altria any better. I traded Bank of America fine. I traded Bank of America like I should have. I got out early. It broke through the triangle. That was a sign to get out of there. I got out early. Maybe I could have saved $1. I could have got out at 48 instead of 47, but that's not the worst thing in the world. Verizon though. Verizon was, I completely missed the shot with Verizon. I traded this horribly. I'm ashamed of the way I traded this one. I don't know what I was thinking. You know, I was talking all this big talk about be okay with being wrong, which is what an early out is about. Like, oh, I'm wrong. Let me get out now before I lose it all, so I have extra money to get back in later, which is exactly what could have happened. Had I cut those 2 losses at 20, I would have lost $4. Then I could have turned right around and got 2 calls to the downside at 31, sold one at 40 and sold the other one at 45, and that would have gave me $23 profit on Verizon. With the $4 loss, that'll gave me a $19 win on Verizon on top of the $13 win. And that would have gave me a $32 win. So I would have had a bigger green day than yesterday just off of trading Verizon better. Just like that, I would have had the biggest green day of my trading in the past few weeks. Just off of trading Verizon better. Simply just off of that. That's all I had to do. But, I mean, you can't cry over spilled milk. You just learn from it and get better. I should never have a 20% any type of loss unless I'm swinging overnight and it dies in the morning. My biggest loss should be no more than maybe 15 to 17% because of my 10% stops, and I just didn't play that right, but it's all right. You learn, you get better, and you live. You live to fight another day. So my watch list for tomorrow: Carnival Cruise Line, U.S. Steel, Plug Power, Kroger, Sun Power, and Cleveland Cliffs. I think it's how you say it, CLF. Cleveland Cliffs, yeah. CLF and X are both steel plays. Plug is of course EV, as Sun Power is probably solar. Carnival Cruise Line and Kroger are kind of like reopen trades. And also potential watch for American Airlines to the downside on the put. I'm going to be watching that as my 7th trade, is American Airlines to the downside, as well as you see it right there, America to the downside. It hit the top of the Barney formation, and now it seems like it's going to be dropping. So American Airlines, Las Vegas Sands, and MGM. Those 3 are my outliers. Most likely to fall, MGM, because it hit the top of Barney formation to the downside. So MGM put. Las Vegas Sands, I'm not sure. Las Vegas Sands put more than likely. But MGM and American Airlines to the downside. Especially those 2. So I'm watching those 2 to the downside on top of all of these. I might put one of these in place of X, because X and CLF are pretty much the same stock. And CLF was moving better yesterday or today than X. But X moves faster if it falls, so I'm watching both. So those are my 6, with the 2 mentionings of American Airlines and MGM. Alright, I think I said enough. I appreciate you guys for watching. Y'all have a good night. And here's to a green day tomorrow. Technically today was green because I didn't lose, but you know. Alright, y'all, have a good one.